everyone, Anthony here. Welcome to this investment thought of the week. There is a newsletter that I write, and in that newsletter you get a whole bunch of different things, whether you subscribe to the free tier or the paid tier. In the free tier, we always go through this investment thought, and that is what I'm about to walk you through here. If you want to subscribe and get this newsletter in your inbox when it comes out, this investment thought is from August 16th, and then of course I post the audio on YouTube if you guys are interested in getting the newsletter in your email every other week. Then subscribe to the newsletter. That's Metals and Momentum on Substack, and then you'll get that exactly when it comes out. So interesting thoughts in this one. I'm going to show you how to outperform all of real estate investors by simply just being at the beach. There's an investment thesis that I'm going to walk you through here. If you're interested in more, then subscribe to the free newsletter on Substack. That's Metals and Momentum. This is the investment thought of the week. I stopped saving money and made more than ever. Bi-weekly report, Metals and Momentum, August 16th. Most people are stuck in this thought that real estate is the only way to make cash and get rich. Well, you are a subscriber of this newsletter because you hope to find it an easier way. And I will tell you, there is one easier way. You don't have to do a single bit of research. You never have to end up in court because a tenant refused to pay rent. You'll have zero tenants. You will collect money every single month, but you will be smart because you will be at the beach, making more money than the average real estate investor in Canada. You will do nothing and you will be paid unless like something crazy happens, like we enter into like World War III, or maybe like a nuclear bomb goes off or something like that. There's no 100% certain ways to make money, but there is this. A wild fact is that if you bought a house as a rental in the last 5 years, unless you put like something like $120,000 down on that house, you are paying for the privilege of having somebody else trash your home, condo, or apartment you thought was a great investment. I'm currently renting from somebody who is not making money on this rental, and he does the bare minimum work a landlord can do because he's paying for me to live here. Sure, I guess I'm helping him with the mortgage, of course, but I'm not covering the total cost of that mortgage, not even close. My neighbor actually told me how much he pays for his mortgage, and I rent a townhome. It's the exact same as the one next to it, and I went, and it went actually up for sale at the exact same time. It's stupid. The mortgage payment for these condos, or I guess townhouses, is dumb. There are certainly easier ways to actually cash flow, and all I want in return for teaching you this is for you to share this episode with a friend. The average 2-bedroom apartment in Ontario now costs $2,285 to rent. In Toronto, it's actually closer to $3,000, maybe like $3,066. But let's assume you want to avoid like the gunshots, live in like more than a shoebox, avoid the rats, the meth addicts, and the car thieves. So you're looking somewhere in like a more smaller town, something like maybe London, Brantford, Burlington, maybe even Oakville. Londoners, maybe you won't avoid the meth addicts there, but you just want to avoid the Toronto prices, that's for sure. The average cost of a 2-bedroom condo in Ontario, there is, of course, a wild swing depending on where you're looking. Of course, you could buy a 2-bedroom former apartment that was converted into a condo in London, Ontario for about like $400,000. But there's condos in Oakville that, of course, sell for like $1.5 million. So I asked ChatGPT what is the average cost of a 2-bedroom condo in Ontario. It's saying $860K. I feel like that's a little high. Google is saying $685K. I've been looking lately for myself. I've been seeing about $500,000 to $700,000. So how's like 650? Let's use that number. That seems about right to me. And of course, I was avoiding neighborhoods where there are like known meth houses. Let's assume you would be doing the same. So this means you would have to cough up about a minimum of 7%, which is about $45,000. And assuming we want to use this as a rental, and assuming you have pretty good credit, and assuming that the bank is going to offer you a reasonable interest rate, let's say 4.45%. I think not many people are going to get that, but let's assume they are going to offer you that fantastic rate at about this time right now. So here is what the mortgage calculator is saying this would actually cost you to buy. So we have the home price of $650,000. We have a down payment of 7%. The loan term is 25 years. We have an interest rate of 4.45%. So your mortgage payment, without any of the extra expenses alone, monthly is $3,342.87. If you want to include, like, say, property tax, I don't know exactly how accurate this would be, but the property tax is saying it's about $650 plus like the other costs that are associated with like owning a home. Might be like insurance, could be like updates to the unit. Then it's the mortgage calculator is estimating the total amount out of pocket is $4,200. But let's just focus on the number $3,342.87. That is the mortgage payment alone. So if your mortgage payment is $3,342 a month, that is just the mortgage payment alone. To then rent out that apartment or condo for about $2,285. So your monthly rate of return is actually negative 31.6%. That's not including insurance. That's not, maybe there's going to be property tax. Maybe there's like a condo fee that we're not including here. That's only including $2,500 in other costs. That's what I put into the mortgage calculator. That's something like maybe like hiring a plumber, maybe a few times a year, and that's a few times in 25 years. And let's consider like there are no upgrades. If something goes wrong, then there's no room for wiggle there. There's no like lawyer fees if you get into if you get a really crappy tenant. There's just the mortgage. That is just the mortgage rental rate of return. That is emotionally disturbing. But there is hope, because I told you I would show you a way to outperform that negative 31.6% rate of return and collect monthly income and be at the beach. So the solution is something that I do on the regular, and that is storing money in SGOV. So SGOV is not a stock, but it requires you to have a brokerage account. Just as you would buy stocks, there is zero chance that the CEO of SGOV will show up to work drunk or like tell your customers to screw off and ruin the entire business, because SGOV is not a business. This is a U.S. Treasury bond fund that is run by our future overlords, that is BlackRock. And all this does is mimic the performance of the most secure bonds in the world, that is the US&A 0 to 3 month treasury bonds. Now, some gold bugs will start to shake in their boots thinking about loaning money to the government through a bond, but these bonds mature, meaning that you essentially get all your money back plus the interest you were paid to hold them every 3 months. And if these bonds don't get paid, then something insane has probably happened. Like, I'm talking like nuclear bomb was dropped directly onto like the Federal Reserve, or the government defaulted on their debt. In that case, then, we have much bigger problems than just receiving that free little bit of money that you're going to receive from holding SGOV. So assuming they do pay you forever, how much? So we have to kind of think about how much do they actually pay you. Let's take a look. Let's take the down payment you would have taken to the bank before reading this newsletter. Let's say that was the $45,500, and we're going to use this as an example. So for that amount of money, you would get 335 shares of SGOV. It's currently priced at $100.48. Then you'd get paid $126.90. That's in US dollars, but the Canadian dollars is 171.32 Canadian dollars every month, and you would do nothing. So there are no court dates, there are no calls to bylaw like my neighbor had to do a couple of months back. You're just at the beach. This doesn't sound all that exciting, and I just looked at my year-to-date return on my stock portfolio for 2024 up until now. I was up 45%. And I assure you, I did a lot more work than just go to the beach. And I took a lot more risk than simply handing money over to BlackRock so they could mimic the performance of the most liquid asset in the world, that is the 0 to 3 month treasury bond. My premium subscription plan on Substack costs $9 a month. So if you wanted BlackRock to pay for your subscription to Metals and Momentum, you would have to buy 17.6 shares of SGOV. That is a total of $17.69 USD. So that way you could cover the cost of this monthly subscription, but then you'd be at the beach and you'd be reading this for free forever. So that actually doesn't sound too bad. But this is how you make money essentially doing nothing and actually beating the average real estate investor in Ontario. So how do I use this in my investment portfolio to generate bigger returns? Well, some years I actually don't own SGOV, and sometimes I'm just waiting for the perfect entry point, and that's when I would sit in something like SGOV, just waiting. And that's what I've been thinking about doing recently with some of my trading capital. Now, you do pay a bank fee to buy and sell SGOV, so you wouldn't want to do this with, say, something like $300. But when I don't know what to buy, or maybe when I'm sitting on a bit too much cash that's doing nothing, then that's when I'm going to start to move money into SGOV. This asset is liquid, meaning you can buy and sell this at any point in time during market hours. You can't say the same thing for a rental property. Most houses in Canada have actually been sitting on the market for almost a full year now, which is kind of crazy to think about. If you look at the chart of SGOV, and you can pull this up on Yahoo Finance or look in the newsletter here, you can see that the price is adjusting and then floating upward, then correcting and resetting on the 3 month time span. You can sell SGOV, and even if you don't wait the full 3 months for the full return, then of course your return is going to slightly vary. But just because you buy at the beginning of the 3 month cycle doesn't mean you actually make money on SGOV when it actually goes up, because it's mimicking the performance of a 0 to 3 month treasury bond, and that price can change, but the real rate of return varies as well. So here's why I don't store money in a bank account. When I want to hold X percentage of cash because I'm hoping there's going to be like a correction in all stocks or stocks that I'm watching, I would like to park some of my cash in just literal like CAD or USD. Those are going to be stored in physical dollars there, but I would never store that cash in a bank account or something like a high yield savings account, because interest rates are trash and you can actually make so much more using something like SGOV. So in the newsletter, you'll see there is like a breakdown of CIBC's interest rate savings accounts, and it's just embarrassing. Like some of these regular interest rates are 0.05%, 0.30%. Like this sucks. So why would you put money in a savings account, or even like a CIBC has a TFSA tax advantage savings account, and the interest rate on this is 0.30%. That's stupid. I would move that money and use it to buy something like SGOV, because this is essentially mimicking one of the most safest and liquid assets in the world, that is a US Treasury bond. So if you want to move up a tier and earn more interest from the bank, then that actually requires higher cash balances. And most of these savings accounts actually require some crazy high dollar value, something like $1 million, in order to be paid like a full 4.9%. And that is the prime interest rate that a lot of banks will start to advertise. But what they don't tell you, and this is something that you have to read in the fine print, is that these cash balances need to be something like $1 million. It's really stupid. So I do not store cash in a traditional bank account or even a high yield savings account. Those all suck. Maybe that'll change in the future. I doubt it. But how I hold cash is either in physical cash, cash in a brokerage account, or in SGOV. Now, my long-term savings account, this is all going to be physical gold and silver, which appreciates over time. And lately, it's been appreciating dramatically. I was just looking at the chart for YouTube subscribers, and I was watching the chart, and we were seeing that it was an 89% move over the last like 500 trading days or something like that. A little over than a year or so. I think it was like 2023. Going back to there, since up until now, we've seen an 89% rate of return on gold, which is absolutely insane. Gold has actually appreciated about 7% on average for the last 100 years. So my emergency fund is either going to be physical cash. I choose to spread that out via safety deposit boxes and cash, of course, in my wallet. If it's an emergency, then I want it in hand, or at least gettable within a business day. Next is savings in a brokerage account. After that, I keep savings in SGOV, so that way I'm earning interest. Because cash actually loses value over time. So balancing it out between all the things that I just mentioned is how I go about it with my own money. And that way, my money makes money. I work smarter, not harder. The problem with Canadian real estate right now is it's competing with assets like SGOV that pay you a little to do nothing. And while Canadian real estate is actually costing you money and giving you headaches, maybe prices will come down. Maybe you will hit the lottery and like won't care about the price. I don't want to be the guy who says, you know, I'm going to hit the lottery one day, but never buys a ticket. So I buy a lottery ticket once every 4 years, but I don't do it with my own money because I use SGOV to pay me, and then I get BlackRock to pay it for me.